I'm Deborah Borchardt, and this is your midday market update. Well, we've been jumping back and forth on the Dow into negative and positive territory. Right now, we're on the downside along with the S&P 500 and the NASDAQ. So the question is this our correction that a lot of traders have been hoping for? Well, joining me now is Mark Newton from Greywolf. So Mark, what are the levels that we need to hit to confirm that this is that big correction everybody's been asking for?
You want to look at December lows for the most part, which in the S&P is really not down until 1755, and the futures are right around 1765 in the cash. And so it's tough to make more of this than just a short-term pullback right now. The broader trends are still intact. If anything, you saw the advanced decline hit new highs early last week, and so most times if you see a bigger correction, the advanced decline will peak out a full 4 to 6 months prior to that happening. So right now there are a lot of reasons to suspect it's going to be short-term in nature, and then really over the next couple of weeks it could present a decent buying opportunity. Really any sort of major rolling over the market takes time. It doesn't just happen in a short period of time. So really initially pullbacks should be buyable. You know, we saw decent strength in technology and financials over the last couple of weeks, particularly in the regionals, and so that leads me to believe that a lot of the selling was warranted, I think, coming into 2014. But you're already starting to see signs of fear escalate, and the VIX has gone up from 10 to almost 18 in a very short period of time. So there are definitely people taking notice, and the larger, broader technical trends have not been violated yet. So for me, a lot of this is just short-term weakness. If all three major U.S. indices, the NASDAQ, the Dow, and the S&P, were to get under December lows, that would be what would certainly change things. You start to see correlation rising again. That would be obviously another thing that would be more bearish for the intermediate term. My thinking is that seasonally we're still in a very bullish time, and that really pullbacks probably still lead to rallies into March or April, and at that time you could see a bigger than expected pullback, and really Q2 or 3 from the period between May into probably September should be a downtime for equities this year. But for now, it's still tough to make too much of this.
All right, so there you go. Mark's giving you the levels that this market needs to hit in order to confirm that we're on a real serious downtrend, but for now he thinks it's going to be short-lived. That's Mark Newton from Greywolf. And I'm Deborah Borchardt with The Street.